Hello everybody, welcome to another special weekend episode. Well, the post-Hindenburg scenario is still not settled down at Adani Group of companies. If you look at the share prices of some of the Adani Group of companies, we notice that they are still down by more than 50% of what they were just before the Hindenburg research report was released.
Welcome back. Let's shift our attention now to the Adani Group stocks. The stocks are down anywhere in a range of 2 to 7%. The group as a whole has erased nearly 50,000 crore of market capitalization in today's session so far. CNBC TV18 has accessed a report by the Ken that the Adani Group has not filed any update on the recent release of pledged shares.
2 months ago, US-based short seller Hindenburg Research released a scathing report against the Adani Group. Gautam Adani, who was the world's fourth richest man back then, was accused of running an empire that engaged in brazen stock manipulation, accounting fraud, and improper use of offshore tax havens. The research firm also warned investors against the group's high debt and overvaluation to the extent of 85% in some group stocks.
Adani Total Gas is down by close to 75% compared to what it was on Jan 24. Adani Green, more than 50% down. Adani Transmission, again more than 50% down. Adani Enterprises, another 50% down. And Adani Wilmar, more than 40% down. Almost all the group companies are down by at least 30%. Now this is significant because we need to understand that the market still believes in what Hindenburg research report is saying. And in this video, we are going to analyze what are some of the takeaways for you and me with respect to how corporate strategy is designed. This is going to be a very interesting video. Please go ahead, click on that like button and also subscribe to the channel if you haven't already. It only takes 2 seconds for you, but it gives me a lot of motivation. Let's get started with what was there actually in the Hindenburg report. According to me, there are 3 main takeaways. Number 1 is they suspected some kind of market manipulation. It's an allegation. Please remember that it is only an allegation at this point in time. The second point is another allegation where they highlight that potentially these guys own more than 75% of the company, while the law requires you to hold less than 75% of the shares of the own company. And the third part, while the first 2 are allegations, the third part was a fact. They highlighted that the debt that this particular group of companies carry is way higher compared to all the other competitors or all the other players within the same industry. This is a fact. Nobody can deny that. You and I can also go and check this fact on the internet. What is the debt level? How much loans did Adani Group of companies take compared to other companies in the same industry? That is what we are going to talk about. Allegations are still allegations. Adanis are trying to go ahead and face off these allegations. They are trying to brush these off until the law comes over and determines, hey, there is something actually wrong about this. Nobody can talk about that. But on the other hand, what Adani has been doing over the last 2 months is they are trying to strategize in such a way that they reduce their debt levels. And how are they doing that? They went ahead with some roadshows in Hong Kong, Singapore and Middle East. And these roadshows, the objective was to raise some capital. Were they successful? Absolutely yes. They raised close to 15,000 crores from GQG Partners. And GQG is an asset management company based out of the US, which has a total of $90 billion worth of assets under its management.
Because if you look at our history, we have owned a lot of times very high multiple names. And the reason is because the question is where the earnings going to be 5 years out, right? So we used to own Hindustan Unilever at 40 plus times earnings and so on and so forth. So and a lot of names outside India. Amazon was a fairly high multiple name for a decade that we owned it. But I think the real question is the way we try to think about is where the earnings are going to be in 3 to 5 years. And from that vantage point, some of these businesses are actually primed as the capex begins to stabilize a little bit. The free cash flow generation is going to be much more like hockey stick, we believe.
Now, what is this asset management company? They manage assets for, let's say, wealthy people and also institutional investors like pension funds across different parts of the world. And these individuals and the pension funds' primary objective is to make profits. And that's the reason why GQG is always looking for opportunities around the world where they believe they can make substantial amounts of profit. They invested in India before in ITC, HDFC, ICICI, big names. Now it is pretty obvious that they believe and they see some kind of potential in the Adani Group of companies at this point in time, which essentially gives a lot of confidence to other investors in the entire community. This confidence building exercise is as important as actually going and implementing a certain strategy for them right now. Because what Hindenburg destroyed is the trust and confidence, and now they need to do other activities which can help them increase that trust level. And this was the first thing that they did. Two outcomes from this scenario. Number one, trust, and also number two, they are selling some equity in their business to GQG Partners, taking that 15,000 crores, and they are at the same time reducing their debt by paying off certain loans. And this process, they are basically going back to Hindenburg and saying that our debt levels are going down. Simultaneously, they also had some commitments previously where they were about to work on a 34,000 crore coal to PVC project based out of Mundra. And now they are putting that project on hold.
Over the weekend, PTI has reported that the group has now suspended work on a project where the total project outlay or the cost outlay was close to 34,900 crore. This was a petrochemical plant that was expected to come up in Mundra based out of Gujarat.
Well, coal to PVC has huge opportunity in India specifically because right now of the total 4 million consumption, 4 million tons of consumption of PVC in India, India produces only 1.5 million tons, and the remaining 2.5 million tons of PVC is being imported from other parts of the world. And why is PVC important? PVC is different from other kind of plastics. The first one, PVC is not a short-term use plastic. It can basically be used for decades. We are not using for single-use plastic here. So it can go into, let's say, packaging of non-food material. It can be used for sewage pipes. It can also be used as the insulation pipes for the electrical wires, and it has a whole lot of other use cases. And the important point here is, as we move away from producing power through coal, this is one of the alternate use cases for coal. And coal to PVC is not as polluting as coal to power. And also, another slight addition in this entire context is Adani's already own a coal mine in Australia. They can import coal from there and they can start producing PVC. This is a long-term play. They started this entire activity in 2021 May, and they were putting ahead close to 34,000 crores for this entire plant. Now, with all the sentiment being negative, they mentioned that they are putting this plan on hold. They are not saying that we are completely stopping this project. They see a clear opportunity, and the opportunity is in their hands when they want to go ahead and execute. So probably once this entire shift in the mood is looking positive for them, they'll go ahead and start working on this coal to PVC plant. It's important to observe that one, they are reducing the debt. Number two, they are also not committing to more debt at this point in time. However, it is not always the case that they are not going behind any growth opportunity. No, they were very clear that there are a lot of airports that are up for privatization over the next few years, and they are very clear. They mentioned we are going to bid for these airports. We want the ownership of these airports. As of now, Adani's own 6 airports in the country. They know that it is difficult for them to get that ownership of these airports from other private players in the country. While the coal to PVC opportunity is in their hands and they can basically pause and start whenever they need to or whenever they want to. However, this airports opportunity is something, if it goes by, they'll miss the bus.
Our strategy is simple to create a scale. So if the bid condition is right for us, we will bid.
So a smaller airport means a greater risk and the government will need to cover
not
that.
Not necessarily. You know, India has a very ambitious plan with the Adani scheme and all, and with the regional aircraft carrier. So I think we will look at the merit of the airport, merit of the potential of growth.
Now, what is government doing in this scenario? There was a lot of media scrutiny over why is government or why are the regulators not questioning Adani at all? Well, there are a bunch of things that are happening behind the background. Number one, well, as of March 30th, there are 4 Adani Group of companies under the ASM surveillance. What is ASM? Additional Surveillance Measures. And additional surveillance measures, this is basically an initiative by SEBI, the Security and Exchange Board of India. The objective of this entire initiative is to make sure that they are protecting this or the safeguarding the interest of investors like you and me.
Meanwhile, the National Stocks Exchange, India's benchmark equity index, has placed 3 Adani Group stocks under increased short-term surveillance. Stock Exchange puts stocks into a short-term or long-term additional surveillance mechanism framework during periods of extreme volatility. That is done mainly to protect investors from speculative or malicious trading.
They put certain stocks on this list, giving the hint to the investor that something is going on in these stocks. And how do they determine this? Number one could be the price volatility. Number two could be the volume volatility, how many shares are being traded in the market. And another interesting measure is the number of unique PAN cards who are trading in this particular stock. So they just want to highlight this is only one of the measures, one of the interesting measures. There are a few more interesting measures which will help them understand, is this trading being manipulated versus not? And they have put 4 Adani stocks under this radar right now. Which means as an investor, we need to be careful about before going and investing in these stocks. Typically, whenever a stock is put on these ASM lists, their stock price goes down immediately. Because investors are a little more worried about the future of that particular stock and subsequently the company. Well, we don't need to go so far with respect to Adani, huge market cap, but ultimately short term there might be volatility as indicated by that ASM list. Now, what are some of the takeaways for you and me? The first thing we need to understand is that it is not just about what Adani is doing, how the customers or investors are perceiving the company. There is also a lot of back-end work that is happening with respect to the regulators, how they are looking into this entire situation. The Supreme Court has asked the regulators to dig deep into this matter and ask them to produce their report in 2 months. Now, that's on the regulator side. On the customer side, it is very obvious. Now, that is on the regulator side. On the investor side, it is very obvious that all the elements will map towards, do you trust the company or do you not? And that is the reason the corporate strategy for any company, including Adani, is revolving around increasing the trust and confidence. Nothing more, nothing less. There are a few other interesting business terms that you need to remember through this entire exercise. Number one is the background of ASM. I'll give you a link to a great article. Please do go ahead and understand how ASM lists are curated. Number two, benchmarking, comparison with other companies, debt levels comparisons with other companies is a very common activity. Comparisons are called as benchmarking exercises in the corporate world. This is the CEO language. If you have any questions around benchmarking, please do let me know in the comments and I will help you understand a bit more about the topic. Thank you so much, guys. Please do click on that like button if you haven't already, and I'll see you again in the next video. Bye-bye.